Hey, good morning, good afternoon, everybody. Let's go ahead and get started with our broad market analysis. We'll be covering the dates of the 4th through the 9th of June, not any major holidays coming up, but we say the 4th because a lot of us are future traders, and towards the end of the video, I cover the ES futures and the NASDAQ. As you guys all know, they're actionable charts that you can trade off of. If you have any questions, feel free to ask me there in the room. Let's go ahead and get started. So first things, let's look at earnings. You can see that earnings, it's getting pretty light. Some of the, I would say, not so popular names are coming up. A few that just kind of, stick out to me that I actually recognize and would be interested in see what happens. Stitch Fix, I'm not a huge fan. I've been saying that for a long time. I think their product's super expensive, especially during this time in the economy. And they just don't put together a nice package. That's just my first thoughts. Dave and Buster's, we don't have one anywhere near where I live, but I remember this over in Denver, and it was a good time to hang out. Coming on over here, GameStop, they may, see something fun and exciting, maybe volatile, so we'll check those out as well. Trip.com, love to see how they're going to be doing, and then moving over. Other than that, DocuSign, and that's pretty much it as far as earnings go for me that I would be interested in. Moving on over, this is the econ data that drops, and there could be some more out there. So if you use a different platform, you may have a little bit more information than I. Again, just to reiterate, news is just a catalyst that pushes price into the levels that we already have on our charts. So I don't put a lot of emphasis on this. It's not my job to try to, break down this information and figure out what it means. I'm all about price action, and you'll see that. But be aware of these events because we can get prepped and ready and know where our zones are, and then we just kind of wait for these things to drop so that we could trade out of them. Looking here on Monday, we have some PMI, factory orders, ISM. Tuesday, nothing scheduled. Wednesday, consumer credit, trade deficit. Thursday, initial jobless claims, wholesale inventories, and then Friday, none scheduled. I'm going to say this. Now, I always have to cut and paste this, and this is the first time in a very long time that I could get this all in one picture. So this is interesting. A lot of traders feel like the market's extended right now and they're looking for that pullback, but I don't see anything major in here that would really upset the market. So my first sentiment is if you're looking for something like a deep pullback, it may not happen. We might get like a minor pullback. I just don't see any major event causing that. Now, on the other side of that, because we don't have anything major as far as econ data, it makes me think that there could be an unexpected news catalyst to drop into the market to create some kind of buying opportunity at demand levels. Let's go ahead and move on. So this is the neutral strategy. This is me showing you what we did the previous week. And we just want to point out, how did the charts react off the levels? Well, first thing you can see is we gapped up into the target one. We pulled back. We did get the short trigger to the downside here, but did not quite pull back into the 415 level. We immediately went bid once we got over the cloud, just like the previous week. Once we got over that cloud, things were just up to the upside. Nice explosion here. So if you're using your trendy cloud, you're using those EMAs, this is helping you stay in that longer trade to the upside as well. We also got a buy signal above T1, and then we ended up hitting T2, not quite getting to T3. Over here on the Qs, we gapped up again right into T1 and T2. You can see that the levels worked really well. We pulled back all the way into the neutral. Same thing, we broke below the neutral, but didn't quite come into that target one at 346. Same thing, consolidated here. We got a buy signal. We broke above the cloud. Next 4-hour candle, we came back and tested that cloud, another buy signal, and then up she went almost all the way to target 3. Both of these not hitting target 3s. It was a little choppy in the first couple sessions, but to go back to what I said last broad market analysis, I was absolutely right on point. I said Tuesday and Wednesday down, Thursday afternoon green, and then Friday continue the rally to the upside. So great coaching there. Hope you guys did well. Hope you love the charts. And if you do, this is just a reminder, please give this a like and please post comments if you have anything that you would like for me to include in these videos or any kind of something that I can help you understand. All right, so next one, let's go ahead and go to this week's neutral strategy. So something you'll notice with this week's neutral strategy is that I have four targets to the upside and downside on both name SPY and QQQ. Biggest thing here, just take a picture, know where my neutral levels are. And again, if you don't know how to trade this, my YouTube channel, I have a very quick video that tells you how I trade the neutral strategy. I developed this by using supply and demand, Fibonacci's, all that good stuff, and putting it together for a very synergistic approach into the market. These work really, really well if you like levels. And again, just take a quick picture. My overall sentiment, guys, you can see the banners are extremely bullish, which really at this point just means when we pull back into the levels to the downside, look for buyers to step in. And when I say levels to the downside, it could be these levels that you're seeing in here. And I understand that some of you may be watching that are not members. And if not, please come and check us out at Simpler Trading so that you can understand what these levels are and what they mean. Basically, they're identifying supply and demand levels. So even in the neutral, we could find buyers in that box. But the idea here is for you to stay neutral. The bigger moves are going to be if we hit those lower levels, so like 424, 422.97, this is where I'd expect buyers to step back in. All right. Bulls, big thing here, as long as the 4 hours holding above the cloud, I would expect it to be support. Same thing over here on QQQ. As long as the cloud continues to hold, I would expect it to be support. But if it starts breaking down and getting inside of that cloud, I would be cautious. I'll get to that here in a few minutes, as I do believe that we continue to see signs of caution, but also it's bullish. So caution just means for right now, minor pullbacks, there's minor resistance, and it's a buying opportunity until it's not. Over here, this is really important. This is where I believe, you got to be on the right side. You got to be thinking, how do I trade with the bigger players, the institutions, the market makers, all that good stuff. I don't think these guys are looking at 5-minute charts. They're looking at the big picture. And when we zoom in here, you can see that this is a monthly chart. Okay, it's pretty clean. I love the way that this looks, but I want to explain it real quick. Basically, I just measured from the rally, which is right there, into the pivot high. We use some Fibonacci's. I use the 23 and the 38. When we are measuring to the upside, the 23 and 38 are a bullish channel. And as long as price gets into that bullish channel, I'm staying bullish. This week, or last week, price hit the 23.6. That was a really big deal. We've been calling that for a very, very long time, and we got there. Also, 424.62 is now immediate support. If that holds, I would expect moves up towards 31, 35, and 38. Now, each time we get to one of those levels, please understand that can be resistance, and we could get a minor pullback from there. The monthly cloud is your major support now, and basically all you have to do is just take your cursor on your Thinkorswim or your TradingView and run it across here, and you'll get those levels. Okay? All right. So QQQ, same thing, folks. You can see all my notes. I'll end up erasing these because obviously I can't keep them all on here. But this makes it really simple for you to kind of follow what we've been saying week after week. And this week, price is now over the 23.6. That's a really big deal, 346.87. Your immediate support now becomes that number of 346.87, and your target is now 362. Now 362 is quite a bit away, and that's why it's important to go back to your QQQ neutral strategy and figure out where those numbers are up to the upside. Okay, so once again, right now 362 plus is the target, but we do have other targets on that QQQ neutral strategy. There is quite a bit of divergence, and what I'm saying is where price is currently and where the monthly cloud is, it's getting pretty extended, but we understand that price can stay extended. It's just that when we do that, we want to take note. At some point, we typically always come back to test that cloud of support, and then we push back up, come back and test that cloud, push back up, come back down, and so forth. So just understand, that's all I'm saying. It doesn't mean we have to go short. Just understand where those resistance levels and supply zones are, okay? Let's see, the monthly cloud and price. The cloud has major support. Yep, just went over that. And again, immediate support going into this week is going to be around 346.87. Again, we got above the bull channel, really big deal. And before I move on, just really quick, if you're wondering like why did price go bid here when everybody else was getting super bearish, we've been bullish almost this entire year. Matter of fact, going into November, December, we started to come into quarterly demand zones, and all you need to do is understand the structure. And when price comes into those structures and everybody that is not using supply and demand is kind of throwing you off, and and then you're starting to see this kind of stuff, I want to make sure that I could teach you how to spot these levels and what to look for when we get there. The dollar, why is this important? Basically, it comes down to just understanding that um, typically when the dollar is pushing up, we want to be cautious, right? If you're long in your portfolios. If the dollar starts to fall and starts to break down, we continue to see rallies in the market. Well, we already knew that we came into an inside and up formation months ago, and we keep getting these little pops, but they're not like really big pops. Basically, it's the opposite of what I was showing you on the other charts because we are measuring down. Your 23 and 36 are right here, and this is what we call a bear channel. Anytime price pops up into the bear channel, we expect it to come down. So for right now, folks, every time we hit this bear channel, okay, and the dollar drops, the market continues to push up. All right, and that's what's going on. And what's supported is your inside and up formation or that demand zone. So you're really stuck here. And the biggest thing that I want to make a point of this week is price moved to the bearish channel and stalled. Weekly inside candle, okay? Weekly inside, that means this week's candle closed inside of last week's body, all right? And it's caution on portfolio longs if the dollar starts to bid above 104.7. As a disclaimer, I am not a financial advisor. This is just based off of technical levels that I use. Going on over here, this is the skew. A lot of people would say that the skew is broken. I believe the skew is not broken. You need to understand timing is the variable. The problem is that too many traders these days expect results immediately, and they look at it and go, well, the skew is high, but the market didn't go down yesterday. Well, okay, that's okay. Typically, what we're looking for is somewhere between 30 and 90 days. We have no idea when it's going to happen, but what I will tell you is that every time we've come to this red line, the market has pushed up, and it has pushed up big this time, right? I can also tell you if you take this line right here, this red dotted line, every time price is pushed up into there on the skew, timing was the variable, and then the market started to pull back. Now, 2021, it's important. I always bring this up. It threw a lot of people off because we stayed at levels up here for quite some time and the market never pulled back until about 2022. And so it threw a lot of traders off. It was hard to get bullish, even for myself. And so just take it as this is a setup, right? And I, for one, actually got into put debits with timeout and I layered into them, and it's just a trade. That's my biggest thing you have to understand. This is a trade that's based off of skew and supply zones and all that good stuff, and just looking at the over divergence. And I'm not expecting it to work immediately. I want it to work over a period of time. And so I bought out about 60 days. They're a little bit out of the money. I want to say they're like 415s by 410s. I would have to go back and check. And again, don't marry the idea. Put it in an allocation that you're used to, or sorry, that not that you're used to, but something that you can actually stand. I'm not going to put myself in a trade where I'm sweating at night. Very comfortable. If it doesn't work out, it's okay. I just move on to the next trade. All right. All right, so over here at Fear and Greed, once again, the needle is in the greed. I was actually kind of shocked when I opened this up this morning that we weren't pushed more to the right, just because of Friday's rally. I'm a little thrown off by this a little bit because we've been sitting right here almost the entire week last week. And you could see 1 week ago we were at 66. This is weird to me. I felt like it was a lot more bullish this week than the previous week. So this is not really making sense to me. But the idea is that the majority of participants in the market are on the long side. The skew shows you that as well. And so I would be expecting some kind of healthy pullback. And again, timing is the variable. Don't get it twisted. I'm still okay with going long. We have a great process. We can intraday trade. We have some swings on as well. So I'm okay with going long. I just need to understand when to pump my brakes. All right, so now we're getting into the futures. This is the good stuff, and I say that because futures are just really they're fun, and I love teaching them. We have an amazing process, and the ES futures here is just a weekly. It's changed a little bit. Finally, we have this really nice hammer coming out of the cloud. You can see the EMAs started to swoop up, and it's just super bullish. You can see the trendy edge here became support. It was resistance for almost the entire. Half a well, this year of 2023, we finally broke over that. And the question is it now support? It sure the heck looks like it. It came back and tested. So for right now, your immediate support for this week is 42.26. And then if for some reason we break down below there, I would expect buyers to come in around 41.72. Okay. You got your demand level, you have your bigger support, and you have your targets of 43.16 by 75. And then moving over, this is your daily. We have new triggers. Basically, the idea here, guys, is that these just letting you know these are places we can trade off as far as the daily is concerned. When price gets there, use your Squeeze Pro histogram. You know what to look for there. And then we execute the trade to the upside or downside. Again, these are just reference points. When price gets there, we go to a lower time frame to figure out if it indeed is setting up as a short or if it's indeed setting up as a trigger long. Now over here, this is a 2-hour chart on the ES. We have a demand, we have support, and we have minor resistance. Minor resistance just means there could be potential here on the 30-minute or so that we could be going inside and down, and we could be reverting back to the EMA cloud or support. So just understand, bulls, what you need is a break above and then a hold of support, so like an inside candle and then a break above there. You need something like that. Once again, the divergence a little extended here. I would prefer, I don't care if you're a bear or a bull, I would prefer something healthy. Now, we've left some really strong levels here, imbalances in the market, where if price starts to die for any reason, all of these are key spots. Identify them on your 2-hour charts. Just know that this is where I'd expect buyers to show up, and I have identified those, and we have our automated levels as well. Moving on over to the NASDAQ, very, very nice chart. Same thing. Came into demand a long time ago, broke above the cloud. Holding that cloud, we've gotten a couple buy signals. It feels a little extended. The EMA cloud itself right here happens to be within the support and all around the trendy edges. Immediate support is 14,374. Your targets are 14,848. And if for some reason it gets above there, I'd be using these wicks in here for your next targets. Okay. Over here, we are bumping up into some minor resistance, and we have our trigger longs down there at 14,405. And then I made this one a little bit longer just in case, because I really do feel like we need some kind of healthier pullback. We have this demand zone way down here, and I don't want these too close to each other. And this, if this one doesn't work, and let's say that price continues to fall, I'd much rather see it come into here, into this area. Okay. Again, no bias here. When price gets there, we'll use our tools. And then here we have the 2-hour, once again, minor resistance. You can see that support. Then I have 2 demand zones. Take note of those. We'll be talking about them every day. I cannot wait to get started with you guys. And as a reminder, if you missed the first webinar, we have our next webinar coming up. It's a spin on the first one, probably a little bit of extra stuff in there as well. But if you missed it, don't forget to come and join us on this Wednesday at 7 Central. And if you visit Simpler Trading, you guys can sign up there. It is free, which is awesome. And I hope to see you there and your support. And can't wait to get started with you this week. Let's have an amazing week, and we'll see you soon.